Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first TradeFinder, welcome. Happy to have you. If you've seen any of our videos, this is the process. First of all, we start off with this disclaimer. That's what you would have seen in all of the previous recordings that we've done. It's a requirement. I don't want to make light of it in any way, shape, or form. Please take a screenshot of it, read it in detail in your leisure. A couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. The rest of it, we'll talk a little bit about the market. That's how this works each week. Interesting, obviously, the last two trading days. Then we'll review any closed alerts that we may have done with our subscribers from our alert service. You get an idea of how that works at ewotrader.com. And we had highlighted once we entered a Google out of the money butterfly. So we'll update that. We'll go through and review our recent case study considerations. We look for one each and every week. We're going to close out several tonight with the volatility. Worked out really well for a majority of them. So we're going to scale that down considerably from the list. We'll look for another case study consideration for this evening. And with any time that we have left at the end, we'll open it up for general Q&A. We do have support on if you have an administrative type question. The end usually amounts to you giving us your favorite stock symbol, and we take a look at what our indicators have to say about it. Again, please limit it to two symbols if you're asking. We have people that ask for a whole bunch of them, and try to get as many of them in as we can at the time we have allotted. So that's it. That's how TradeFinder works. So again, if you're brand new, welcome. Welcome to those of you that have shown up each and every week. We're happy to have you. So here is the market. Obviously, pretty significant moves the past 2 days. A bit more volatility moving into the market. If we take a look at a couple of things, the 10-day moving average being one of them, we broke down. I posted a note to our subscribers. We do every Thursday night an insiders meeting, which is for our alert subscribers only, where we go through and cover each and every one of our alerts that we currently have. But in the meantime, I can post comments on the website if there's something that I feel is important to talk about. If you looked at the last SPY recording that we did, noted that we have come down and touched the 50-day moving average a few times. And even though we had this big move to the downside yesterday, all we did was touch the 50-day moving average and close back above it. So today was going to be meaningful to see if there was a follow-through or confirmation day. Our alert subscribers are very familiar with what that means, and there wasn't. Clearly, we did the exact opposite of yesterday, where on Friday we opened at the high, closed at the low. Then we had the big move down yesterday, but closed above that 50-day moving average. Today, we opened near the low, closed near the high. So kind of the exact opposite that occurred on Friday. And if you look, we are exactly where we were Friday. So no harm, no foul for the beginning of the week. Monday and Tuesday have just canceled each other out. We're right back where we were on Friday, and we did not have a follow-through day to the downside, breaking below. We have not any of the other times that we tested the 50-day moving average. None of these times that we have follow through. And so here we are again. Is this just another test of that 50-day moving average to where we're going to move up to that 460 level? That's on the Elliott wave long count. We showed that, as well as the weekly count of the current Elliott wave pattern on the SPY. So both of those are showing 460. So if we break above these new highs that we just realized back on the 14th, then 460 would be the target that we would look for. So the other thing that we want to look at is how the volume look. Obviously, there was probably some pretty good volume yesterday, but what about today on the bounce back? And you can see, as expected, a lot of volume yesterday on the move to the downside, but good volume on the recovery today, well above average volume on this bounce back to the upside. So you got to take that into account. That was a solid volume bounce. It wasn't just okay, we're a touch oversold here, and this is just a little bit of a blip back. Now there was volume behind this move. So regardless of the storm clouds on the horizon that we've been talking about, we also posted in the last SPY video a very noted macroeconomist named Raoul Pal, who also sees issues with interest rates going down and the dollar going up and what that could mean globally, economically. Regardless of those things, we have to respect the fact that the market bounced back off the 50-day moving average. It bounced back on above average volume, and we've closed right back on the 10-day moving average. So again, yesterday and today just cancel each other out. We look back as to where we were on Friday, and we'll see which way the market decides to move tomorrow. Do we break back to the upside? Nothing matters until we break these highs. So if we move higher, we could just be testing those highs. We're kind of a bit in limbo right now. We're super extended. We've hit 4 different zigzag targets that we've highlighted in previous SPY updates. If you don't look at our channel on YouTube, please do so. We put a lot of effort into trying to condense some good information in less than 10 minutes on those SPY updates and give you a rough idea of where things are going. It almost seems like people are mad at me that the market is still going to the upside. Hey, you trade, I've said this numerous times, you trade what the market gives you. Now I can cite all the concerns and why we should be cautious, and we are, and the trade positions that we've put on are cautious, heavily move towards the strangles where we can make money either way. If the market breaks to the upside, doesn't mean that the market has to break lower for us to make money. And we put on 2 oversold positions to the upside today, and very oversold. And if the market even goes up to test those highs, those should do very well. And so, you got to trade what the market tells you is going on, regardless of what you think the market should be doing. And we can make all the arguments in the world of why we should be moving lower, but we're not. Market's moving higher, at least for now. And, all that can change, but for now, we're kind of in between. And what I mean by that is we have this 50-day moving average, which clearly acted as support, and we have resistance here at these previous highs. So the fact that we're right in between that, we have to wait and see which of these 2 levels gets broken. So in the meantime, you just look for the best charts. And that's what we'll do tonight, whether it be to the upside or the downside. What's the best charts out there? And those are the type of positions that you put on. If we break to the upside, then we know where our next target is. It's 460. We break to the downside, well, then we relook at things. And I'm on the record as saying, and I fully believe this, at some point in time, we're going to come down and test 400. Now, I don't know if that's next week, next month, or next year, but at some point in time, I think we test 400. So we don't want to just sit there and wait for that to happen and miss the market telling us that we're going to the upside, dummy. Don't get so caught up in what you think's going to happen. Then what I think is going to happen means absolutely nothing. So we trade by what the charts tell us, what Elliott wave tell us, what our confirming indicators tell us. That's how you become successful over a long period of time. It's almost a negative. When I first started trading, I got really lucky and made a lot of money in a short period of time when I first started trading, but I didn't know a whole lot. I just got lucky. And then as I learned more, that was almost like the kiss of death, because as I learned more, I took all the economics classes in college, the business degree. I had every economics class you could take. But you get learning about the economy, you learn things, but it almost seems like the more you learn, the more you start to develop this pattern in your mind of, okay, based on what I know about economics and business, et cetera, this is what the market should be doing. That's the way to get knocked out of the market pretty quickly. That again is trading what you think the market should do. None of that matters. None of that matters. What matters is what the market's doing. And you have to trade based on what the market's doing, and you've got to take your personal view out of it, or you're just not going to be around very long. It's as simple as that. The futures are just dead flat right now. They've done nothing since the market closed, so not giving us any indication of which of these levels we're going to break tomorrow. But I did want to show you a couple of the other markets that our subscribers ask about a lot. We'll look at the IWM. Pretty interesting day, a bounce, but so what? It bounced off support. And there was the financial networks were making a really big deal about how the IWM had a nice move. It just bounced off support. It means nothing more than that. And so if we take a look at volume, exactly the same as the SPY. A little bit bigger volume yesterday. Yeah, it's above average. So it's solid volume on the move back to the upside today. But look at that, it didn't even recover the 10-day moving average. So I don't know what everybody was ballyhooing about. If it gets above 230, all right, well, then we have something going. So if the IWM moves up here, it may test 230. And certainly you can make some money from 220 to 230, but it's meaningless. You have a very clear defined range here. Now on the IWM, a break below 210 means something. A break above 230 means something. This range in here between 210 and 230 doesn't mean a thing. It's not telling us anything. So today's action, okay, it was a nice oversold bounce. That's it. That's what it amounts to. Nothing more than that. So sometimes I just shake my head and I remind myself of why I like to keep the financial networks on mute. People have their own ulterior motives when they get on there. People that are managing tons of money and they have assets under management, their job is to keep those assets because that's how they get paid. They get paid by having assets under management. And so they are always going to highlight the positives whenever they can. So there's only a handful of people that when they speak, I listen to them. Leon Cooperman was on there today. I paid attention when he spoke, but there's very few people that I do. So let's look at the Qs, because we had noted in the last SPY update that although the Qs had been by far the strongest chart, there was chink in the armor, and boy, we had a gap down yesterday. And so we moved back today and we filled the gap. Now, the one thing you can say about the Qs, they're the one market that closed above the 10-day moving average. The SPY closed dead on it. The IWM, the Russell, closed below it. But the Qs did recover it. So they filled the gap and recovered that 10-day moving average. We are still labeled in the wave 3 on the larger Elliott wave pattern. So it's still the best looking chart, but it did mess up the DMI. So that's all. We had a little kiss of the 2 directional indicators, but the ADX is pointing down. Maybe within a couple days that could reset itself and be confirming again as it was a few days ago. But for now, it's kind of a mess. And so we look at the CCI then, and you can see that, well, we came down to the 0 line, that's what it should have done. So if we're moving higher, we actually have some more information coming out on the CCI. If you've not ever looked at it, it's a good indicator to look at. So watch for that educational release in the not too distant future. But moving back from the 0 line back to the upside, that's what it's supposed to do. That gives it an opportunity, because it didn't break lower than the 0 line, to move back above a positive 100 and above this level. And then we have something going on the Qs again. But right now, we tested the 30-day moving average, and you heard me say that I don't view that as support resistance. I look at the 30, it's on the charts because I watch the 10-30 crosses, whether it's to the upside or the downside. But as far as support and resistance areas, I look at the 10-day for short term, and I look at the 50-day for longer term trends. And the 30 days just on there again for showing crossovers. And the 10 crosses above the 30, you're in an uptrend. 10 crosses below the 30, you're likely moving into a downtrend. We didn't even come close to the 10-day crossing below the 30. So we respect the fact that we filled the gap. We got back above the 10-day moving average. Maybe we reset things, and Friday, Monday, and Tuesday mean nothing by the end of the day tomorrow. I mean, that could happen. That would be a big update tomorrow, but we'll see. Right now, the market is just like, okay, we got oversold, we bounced back, now what? That appears to be what's going on, because I mean the futures are like, it just is straight a flat line as you could ever imagine. So that's pretty interesting. I do want to show, not sure if the updated chart will be there yet or not on Bitcoin, because remember, we look at end of day here. Yeah, it is. Key here, we've been talking about this for quite some time, and we had this downward zigzag pattern that we talked about in TradeFinder down to that 161.8% level, and we broke it. So we've broken below. Remember, I said call support 30, resistance 40, just rounding it off. But we broke below it, and we'll see if this is a head fake. Is it a head fake on the breakout? Because it's as nice of a descending triangle as you'll ever see moving into the point of it. Mentioned that to the subscribers last night in the note as well. Beware if you're long cryptos or Bitcoin, that's danger, Will Robinson right there. But it could be a head fake, and we could turn and sprint back to the upside. It doesn't necessarily mean we're breaking down, but it's something to watch. And a lot of people are looking at Bitcoin and cryptos as a risk on, risk off type of thing, looking as a kind of a cue for where the market may go from here. So if that's a signal, I don't know that I totally buy into the fact that there's so much governmental geopolitical noise around the cryptos now, and Bitcoin especially. I don't know that it's much of a signal of where the markets are going to go. I do think it matters from risk of what people are willing to take. There's nobody that I think would question that Bitcoin is volatile. Certainly hasn't been the last couple of months as it's consolidated in this triangle, but other than that, it normally has. And you have to have a pretty good risk appetite to get involved in that, knowing that you have these big swings. But just wanted to show that breakdown there, because the difference between the breakdown that occurred on the 22nd and the one that occurred yesterday is the close. So we closed below it, where it was able to recover it and get back within the triangle, the confines back in June. So we'll be looking to see the next day or two should tell us a lot on whether or not this is a head fake, or watch out below 24 and then 20 are the two levels that we've been looking at for continued moves lower if Bitcoin were to break to the downside. So I thought I would share those things with you as well. Let's take a look at the dollar. The dollar has been pretty strong. Just share that with you real quick. And it's looking like it's breaking up out of that triangle. It had a bit of a triangle. So, you get interest rates moving lower. And I don't know if you saw today, but they recovered. But let's look at TNX. The 10-year got really scary earlier. And I know that we're just back to levels that we were at the end of last year. But we traded all the way down to 112 on the low. That's pretty low. But you can see we gapped here. So we were oversold. And the bounce today, people were like, okay, interest rates are coming back up. Well, they're probably going to come back up and fill that gap likely at some point. But, we got way oversold. It was due to bounce, move back to the upside. So, as much as people talk about it, and then anytime you hear the words, it's different this time, just run, because it's never different this time. Expressions that have stood the test of time stand the test of time for a reason. And that's because the majority of the time they're accurate. And with interest rates going down and the dollar going up, historically, that's not a positive for global economic health. But everybody seems to think that the economy is going to surprise to the upside. Growth is going to be great. That's what the talking heads are saying. I hope it is. I hope it works out that way. People are dismissing the Delta variant as it's not a big deal because it's only affecting those that aren't vaccinated, and we have more people vaccinated than aren't vaccinated. But you look at the Olympics, and there's two yesterday. I don't know if there was any more today or not, but there's two Olympians that tested positive for COVID that were vaccinated. They'd been vaccinated and they tested positive, and they don't get to go. So, you just don't know, is my point. Nobody knows what's going to happen. People can speculate all they want. Oh, the Delta variant's not going to be a big deal because we have a lot of vaccinated people. You're a doctor? Well, I mean, if you're a microbiologist or something and you're saying that, then I'll pay attention. But if you're a financial person that's speculating on that, your opinion means as little as mine does. So I just think, again, and I harp on this, we trade what the market's telling us. As long as the charts are moving to the upside, we'll take that into account, but we're going to be cautious as well. We're not going to do crazy things. We're not going to go extreme to the upside, even on days like yesterday when you look at it as buying opportunity. I'm telling you, the buy the dip thing one day will end. It always does, and it doesn't end until people are so programmed that they don't pay attention to the fact that it could end, and then we could have a substantial move to the downside. That's when it'll end. So up till that point, we'll wait and see. But I think there's still storm clouds. There's still concerns. Trade the market, what it's telling us. And with that, we'll go ahead and move into looking at our trade that we closed on Google. And so this was, I had highlighted this as one that we had put on. And there's somebody asked for the risk graph of this. So what I'm going to do is I'm going to create a pro trader tips out of this and show the trade, the entry, the risk graph. And it's interesting that I think some of our subscribers were actually disappointed that we exited when we did. But you can see that we had 94% gain in 19 days. And the issue is the fact that we didn't get anywhere near on Google the target prices. So here was the entry, and you can see we held above that support there. We had a supportive DMI. And so the idea was we put on an out of the money call butterfly up near where the wave 5 target is, which is 2,900. So that's why that was the midpoint of the out of the money butterfly. So again, we're trading down here at 24. What was the close? Close was 22.78 was where we closed. And we're looking at a 2,800, 2,900, 3,000 out of the money butterfly. And I've been talking about one of the reasons that this is such a great strategy directionally when the volatility is not extreme is the fact that you can make money on these without the stock getting within the wings of the butterfly. Normally people look at butterflies and they want the stock to stay within the wings. And as time decay erodes, that's how you make money. That's an at the money sideways butterfly, but by placing them out of the money, you make them directional. And we put this on for $2.40. So that's not a very expensive trade to put on Google. And the fact that the stock moved to the upside can allow us to profit on a directional move being right and having a move to the upside. Now we posted a comment here. You can see it kind of messed up our mark-to-market graph. Especially when you have a stock like Google that's a bit volatile. You can see these wild swings here. And that's because the spreads get wide when you close and the market makers don't want to get caught off sides on here. So it's a bit of a weird mark-to-market graph. So like, is understand that spreads widen after the close, and it may not give an accurate view of, during the trading day it was normal. During the trading day, it acted exactly as you would expect it to. But after hours, with the close and the mark-to-market graph, you can see it oscillated between down. It was never down 188%. The trade never was. And up 217, it was never up 217% either. So the mark-to-market graph is misleading on this one, but it's a great tool to have because it's transparent and it shows where every position is every single day. And so then on the exit, we exited when Google moved, and I'll show you here to the upside, and our exit price was on the 14th, and we exited again at a $450 profit. And so as we move forward, there's the 14th right there. So we took advantage of that upward move. And look where the stock's trading. It closed at 24.48. So it moved up about 200 points, but it's still nowhere near 2,800. And that's where the question came, why are we getting out now? Well, it's starting to go a little bit vertical. You've got 100% gain in less than 3 weeks, and all that stuff has to come into play. Doesn't mean that we can't put another one on. In fact, that's what we're looking to do. You can stack these butterflies and just move them further out and still stay with low positions, and you get a gain in one. We didn't put this one on as a stacked out of the money butterfly. Seriously consider doing that. And then you can see, what's happened since. Move to the upside here. Oh, that was when we looked at it here. So that wasn't our entry. Sorry, my apologies there. We closed here on the 14th, but this chart was back when we looked at it, which was on the 8th. We looked at it here. So on the 8th, it was trading down at 23.98, and then we put the out of the money butterfly on, and then there's the 14th. So that was the day we exited on the high that we've had so far. So at this point in time, by relying on our indicators, the fact that it went vertical, etc., so far we exited at the absolute high, the best day we could have exited so far. And we had a little bit of a bounce back to the upside today, and we closed back on the 10-day moving average. If the market does calm down and it looks like it wants to go higher, we're probably going to do this again. We're going to put another out of the money butterfly on Google and set that up again, because you can just, as long as the stock's running, you keep putting them further out so that they're less expensive, right? Because if we put the same one on now, then we're going to be putting it on, well, it'll be a little bit less now because the stock's come down, but you don't want to put the exact same one on that basically takes your profit away. You want to go further out of the money so that you lock in a gain. So we've already made 94%. We don't want to give all that back on the next butterfly. So we're going to move it further out. We can still make money, as you've seen, as the stock moves directionally our way. So if it continues to move to the upside, we have a chance to make money again. But if it doesn't, you don't want to give all that back. So we won't put the exact same position on again. As it moves up, you just move it further out. And it's one of the mentors that I had when I first started trading options would do that, would just continually put out of the money. That's who I learned out of the money butterflies from, making them directional. Nobody ever talked about making a butterfly directional before. It was just, to me anyway, I'd never heard of it. I always thought it was a sideways strategy, so I didn't pay attention to it because I don't like to trade sideways. And then it was just like light bulbs came on the more I started thinking about it and how it worked, and then practicing with it and seeing how it worked. And Google's been one of the best positions, has been my number one stock since I started trading options. And then it's been by far one of the best. There's been other really good ones, but it's worked out really well with these out of the money butterflies as well. So if we continue to bounce up, we'll put another one on. So, the questions were, why are we getting out? We're not near our target yet. Well, now it looks like we did the right thing. And then we'll set it up again if the market does look like it's going to break back to the upside and Google wants to go higher. The chart looks pretty good as far as breaking above that 10-day moving average. Again, the DMI chart is a bit of a mess. We never did get a cross between the two directional indicators, so that's good. The ADX is turned down. Perhaps it turns back to the upside. Hopefully it will. The CCI back to 100, like the Qs, doing exactly what it's supposed to do. So it looks like we want to pay attention to this. And maybe in the next day or two, we put on another out of the money call butterfly on Google. And so we'll certainly be letting you know that. We wouldn't do that tonight because we need to see what happens in tomorrow's trade and follow that closely. But within the next trading day or two, that may very well come back. But as I said, it will be further out of the money. It's not going to be put on at the same price as what we sold the current one at to make. So, think about that. You make nearly 100% gain on a trade, and it did move 200 points, which is not a whole lot for Google. It's what, a 1% move. And the fact that it was nowhere near the lower strike, which is at 2,800. So it's a great strategy. Usually creates some buzz when I talk about out of the money butterflies. I like them more to the upside than the downside. I thought I would go through and share that with you. So looking at the rest of our case studies that we've identified in previous trade finders, we have POLY, and we have taken the calls off here for our subscribers. And you can see we did get a bounce back today. And so far, we just bounced back to resistance. We'll monitor that. If it breaks back above 35 and the market gets strong again, we might need to adjust that back the other way. But right now, you can see that we closed right on the 10-day moving average at the low yesterday, which was the open. We were a little separated there, so a little oversold. We've corrected the oversold condition, and we're testing resistance now at 35. But if it's able to break that with follow through, then we have to respect that, and we may switch that back around. But for now, not yet, because this is just normal at this point in time, correcting that. The next one was MGA. And you can see here was the triangle pattern that we looked at initially. And you're going to see a lot of these broke down. And I talk about how when the market breaks to the downside, you can be fast and furious at times, taking positions off. And with that gap down yesterday, you're pretty greedy if you didn't take that and move on. So we're going to cross that one off the list as being successful. You look at SeaWorld, and we wanted to see that one move a little bit further, again on the low yesterday. So, this is the beauty of the strangles. Yeah, we had some bounce back. Pardon me. We had some bounce back today, but yesterday gave us the opportunity for some of these that we were waiting to break just a little bit lower. Well, when you have a day that's that weak, that occurs. So here's the XLF. Same thing, gap down and was holding. We wanted to see it break 36, and it gapped down all the way to 35 yesterday. So finally we got to the 10%. Now moved back up today to 36, testing again resistance. That doesn't mean anything. So that's good. That one's gone. Hopefully if you were following these, you've been closing those out. Now, ASAI, I thought, all right, well, now we're going to get to the point where, because we've talked about this the past couple of weeks, where 16 was the level that if it broke that, it didn't. Yeah, it had a down day yesterday, and then it did follow through to the downside today. We didn't get a bounce back, but hadn't broken 16 yet. So for now, we'll leave that one. Google was on the 8th, so that one, no matter what you put on there, that should be done. Check this out on MMC. I thought this one might be a negative. This one was back on the 15th. And so you look at that and hung in there pretty well. A little bit of a blip down yesterday, but this one's trading higher than where it was on Friday. It closed higher. So this may continue and power up and hit its wave 5 target. I'm a bit surprised on that one in the power it showed. Autodesk kind of the same way. You look, it had a little bit of a gap down, but look what happened today. Just like zoom right back up to where we were. Okay, we're still back to where we were, trying to break through this 300 level. It's been acting as resistance, but you get a decent market, it's going to blow through that. So it didn't hurt this one at all. So one of the things that I think you'll notice by the time we get through here is yesterday's move down gave us a chance to close all these strangles out, or you should have. But the long trades held in there pretty well, which was surprising. Now we closed out. This was an alert for our subscribers, and we closed this out. We took the downward move, boom, there yesterday to close this out. And you can see it bounded back today. Didn't really make it all the way back to the 10-day moving average, but you can see why we closed it out, because we were getting oversold. So that's the difference between TradeFinder and our alert subscriptions is, TradeFinder, we identify trading considerations, but with the alert subscription, we give you signals when we're entering, adjusting, or exiting to guide you in making your own trading decisions. But with TradeFinder, you're on your own after the consideration. So did you close that out yesterday? We did, and took a nice gain. We'll probably highlight that one next week. So that one's gone. That one should have been closed out. And then big lots, you can see here's where we were on the entry. And then, so that one is yesterday just was a perfect day to take these things off, especially when you see they're all oversold. All these were getting oversold. And that's where I go back to saying, well, today, we recovered the oversold condition. We were down Friday, we were down yesterday. So we were oversold. We bounced back up. Today's just no harm, no foul, and we'll see what happens tomorrow. And if it gives us an idea of giving you that range. So all these, we're closing all these out. We've only had a couple that are still open. Now this one, let's take a look at this. People have asked about this one. So Dave & Buster's, PLAY, and you can see that the entry was right at 39. And then yesterday we got down to a low of 32. That one's borderline. We did not send this one out as an alert to our subscribers, but you can see that we got oversold again. We usually look for, as we say, a 10% move. So if we call it 39, so we're looking for roughly a 4-point move. So right there at 39, down here, we got down to 32. If you didn't take that one off, then perhaps you're getting greedy. It was well oversold and a gap down. So that one, remember, we got increased volatility too, which tanked today. The VIX opened at 23 and closed at 1973. So yesterday we had the addition of volatility, which they all took back today. And then last but not least, DCI. And we looked at this begrudgingly as a long position because we've been doing mostly strangles, as you've noticed, a couple of the long ones. And yeah, it had a rough day yesterday, but look at today. Again, right back to where we were. And so on the 13th, it closed at 65.80, closes 65.85. It's actually higher than where we got in. So our long positions, I think this is a testament to our indicators that we look at. The long positions that we've had are very strong. They've held in there pretty well considering what happened Friday and Monday. Bounced back really nicely. MMC, DCI are in better shape than they were, even with what's going on the 2 days. That allowed us to close out a lot of strangles on those 2 down days. It's great. So, and Autodesk is right back where this should really, and so if you've been watching TradeFinder for a while and you haven't subscribed to the alert service yet, what are you waiting on? I think our record speaks for itself. You've been here, maybe this is your first time, but go back and watch previous TradeFinders. Everything is posted. We don't hide anything. We are 100% transparent. I pat myself on the back when I do well, and I say I screwed up if I make a mistake. I'm not perfect, but all in all, our track record is pretty darn good considering what we've been doing. We are buyers of options, which limits risk, and time decay can be an issue at times, but we overcome it with strategies like out of the money butterflies. We're pretty careful when we put strangles on. That we're not doing it when the volatility is too high, when the market's too sideways. So, we're pretty prudent with what we do, knowing that there's nothing out there that's 100% that works every time. But our record has been pretty darn strong. I'm proud of what we've accomplished here. So that's it. That's for the case study. And you can see this part is going to go really fast next week because now we closed off a whole bunch of some of the case studies that have been lingering for a few weeks now that we've been looking at. So hopefully you took a whole bunch of profits if you've been following along with those, and you're smiling if you've been following along with TradeFinder. So let's see if we can find something today. It's going to be interesting to see with today's bounce if some of the long stuff moves back up. By the way, if you are brand new, people ask quite a bit about this software program. It's called Profit Source. You can find out more about it at profitsource.com. People really like it because of the clean. Oh, I wanted to show you this. I'll use this chart to describe it. The charts are very clean. They're easy to see. It's an Elliott Wave software program. As you can tell, I've traded all the Elliott Wave software programs that I know to exist. That doesn't mean I've tried them all. I've tried all the ones that I know exist, and this is my favorite because it's the most accurate. Also gives me a sense of comfort knowing that it is programmed directly from Elliott's algorithm that he wrote. It's nobody's adaptation of Elliott Wave. I mean, my thing is, and you can totally disagree with me, but my thing is the guy created something special. Why do we want to mess with it? I know I'm nowhere near as smart as he was. I don't understand half of what's in that. I don't understand a tenth of what's in that formula. So I'm not going to fool around with it. He's the smart math guy, so I'm going to follow along with what he says and learn Elliott Wave based on what he created. That's my viewpoint on it. People have other opinions though, because they create their own adaptations of it. And if that works for them, great. I want everybody to be successful and everybody to make money. I don't have anything against anyone that takes it and changes it. This is just my preference, is to stay with the pure algorithm that was written. So what I wanted to share with you is the folks at the Hub Corporation. They're based in Australia. They're the ones that created this. Created these boxes here, these lines, these indicators that if you're an Elliott Wave options, because a lot of people, knowing that I used it, started getting in. They said, "Oh, well, we'll create these things for you guys." So if you're an Elliott Wave options subscriber, you get all this stuff. If you're not, you don't get these things under Elliott Wave options. So we get more stuff from Profit Source than those that aren't Elliott Wave alert subscribers do, but it's pretty cool that they did this. And these three here, where it says EWO, those are actually my search creations that I formulated and back tested years ago that I've been using for a very long time. So here we have bullish impulse stocks. There's three. So let's take a look at that. Now notice the consolidating stocks. If you've been here for a while, it's been well above 100 for a few weeks, right? Now it's down to 84. So the movement over the past 3 days has broken some stocks out, which we saw. We've benefited from that. And so we're back under 100. So not as many as there were. I still, based on the chart with where we are, the fact that we're in this no man's land, the VIX did come back. It's back below 20. I wouldn't have been as eager at 24 or 25 to put a strangle on. But the fact that we're back below 20, that's fine. You can still find good ones. So we'll see. We'll take a look there. But I do want to see these bullish impulse ones just to see. We have Quest Diagnostics, DGX. I've looked at this one before. It doesn't have a lot of liquidity, but man, chart looks good. And you can see the CCI is looking good. Volume is supportive. Look what happened yesterday. So yesterday, it actually moved to the upside in that horrible day that we had yesterday. So let's take all this stuff off. Let's go back to the DMI. And that looks, it's like it didn't even flinch yesterday. It didn't affect it at all. Now, it's not in a 5-wave pattern. Oh, it is. Actually, sorry about that. Took a second to show up. But here's what's interesting is there was resistance there at 135, broke above it yesterday, came back down, tested it a little bit today, and there's the 10-day moving average. That looks great. So there is a concern because I looked at this yesterday, so I'm aware of it, but it's still on the chart, on the search, but it was yesterday as well. The issue here is there's not a lot of liquidity. The spreads aren't that wide, so that's not such a concern, but you're going to be trading with the market makers. So what we usually try to do, take into account the mid price and then liquidity, what's going on, and then I'll usually nod just a little bit, like if we're buying just a little bit to the ask of the midpoint. If we're selling just a little bit to the bid of the midpoint, just to give yourself a reasonable chance of getting filled. And even that, there's no guarantee that we're going to get filled. We do post our actual fill prices, what we get filled at or what we know to be a fill on our website. We don't always get the alert price either. We don't front run. We don't place our trades before we send out the alert. We don't do that. So we don't try to fill our trades till after all the notifications go out to our subscribers. So we're right in the same boat with everybody else. That's the fair way to do it. And that's the way we handle things. So we post what we actually got filled at. So you can see that the difference between the alert price, because sometimes people write in, well, how did you get that price? Well, we didn't. That's what it should have been filled at with everything concerned. But then you still, you're sending out a trade to a brokerage firm. That doesn't, what you should get filled at doesn't mean that's what you're going to get filled at. But that's the process. So my long-winded point here is that when the liquidity is thin like this, you might even have to look at the ask or just a hair away from the ask, because the market makers tend they don't like to play the mid price. If there's good liquidity, they don't care. They'll give you the mid price. But if there's not a lot of liquidity, then you're going to lean towards the ask on the buy, towards the bid on the sell. And that's just life. That's the way it's going to be if you're going to trade with them and they're going to be on the other side. They're not going to give you any quarter. They're not cutting anything. The spread's the spread, and that's the way it's going to be. So that's something to consider with this. But man, I sure like the setup. The CCI came down. It really held an area that looks pretty strong right through here. We broke above resistance. Yesterday's volatility meant nothing, and it looks pretty clear to move up to 150, and it's at 136. That's a pretty decent move. That one's going to be hard to stay away from. But understanding we'll lose the slippage, right? So we'll probably buy near the ask, sell near the bid. Understand that. Don't get frustrated about it. Know it going in. It's likely what it's going to be. By the way, on the out of the money butterfly, when you're putting on a butterfly, those are times when you need to make sure that the broker that you're using specializes in options, because you don't want to lose slippage on 3 legs and pay commissions on 3 legs. And if your broker is still splitting a position like that, which should be 1 trade, good option brokers will fill you as 1 commission, 1 trade up to 4 legs. And a butterfly is just 3 legs. So it's 4 contracts if you're doing 1, but it's 3 legs. So you're buying 2 different strikes. You're selling 2 options at 1 strike. So it's 3 legs. And it should be 1 trade, 1 commission. So if not, you're going to struggle trading options when you're doing spreads and things, because you're going to lose what would have been the profit on slippage and commissions. So, you may have your favorite broker that's been great for stocks, etc., but they're not all good on options, and they all don't care about options. And I think that's a mistake, because that's the place that's growing. The statistics clearly show that the highest growth in the world of trading has been in options. And so if you're not, you're missing the boat. But some of the brokers are stubborn. They're antiquated in their ways. Their platforms are antiquated, and it's frustrating. But I can't recommend brokers. I'm not going to call brokers out. I know the bad ones. I know the good ones. Just not allowed to say anything along those lines. Just tell you, do your research. Search for brokers that are good on options and focus on options, that options is their thing. They're out there. All right, so that looks pretty good. So we'll leave that one. This is a REIT, and if you've heard me speak before, I'm not a big fan of these. It has to be just an over-the-top pattern before I would do anything in these. They just tend not to move as well. It's a personal thing. I get it. I mean, it's a stock, and if it has options, it shouldn't matter. So that's just one of my quirky things. Average volume today on a pretty good move. Again, the CCI is good. Oscillator supportive. 90% extension on the wave 5. So that could be a concern. Interest rates going back down. Is that going to rejuvenate the housing market? Lumber prices have come way down. The things that were stalling the housing market have eased off. So rates that had gone up, they're back down. Lumber costs have come back down. Is the demand still there? I don't know. I'm not in real estate, so I'm not an expert in it, but it just seems like at first blush, you could make an argument from a fundamental standpoint, and I don't make many fundamental arguments, that, you know, the situation has improved over the last couple of months for housing. Maybe we go back to the upside. I would be concerned with the fact that we're nearing 100% extension, but you also have to take into account we took out the recent wave 3 high. It tried it once in June and failed, came back, consolidated into that triangle there, broke out, broke below it yesterday, but immediately right back today, got back above it. That's pretty impressive. Good volume came in today. So that chart's hard to ignore. I don't know anything about this. Let's see if there's what the options look like on it. ADC.
Hi, Rob. Just wanted to quickly remind you of the charts.
Thank you. Oh, yeah. You might have been one chart too late. No, that was TNX. Never mind. But thank you on that. So, man, I hate it when these stocks change. There it is. So let's see. I'll leave this one up to you guys. I don't need to push my viewpoints on REITs. I don't know, maybe there's no options on it. Well, it's not my favorite one anyway, so let's forget it. And then CPRT, let's take a look at this chart. Great day today. Good solid volume, 121%. So we're already extended. Let's look at that DMI though. Is it getting a bit overbought? You have to like the fact that the positive directional indicator consolidated and sprinted higher. That is a positive. The ADX is moving up. It's not to 40 yet, but it's pretty close. My point here is I don't know how much of an upside is left here. It certainly looks good. Where's the CCI at? Still okay. Clearly we have a really nice zigzag pattern there. All right, so there's the target 150 on the extension, and that makes sense. Look at that. See what that, I mean, this stuff is amazing. It amazes me every single day. And how many charts have I seen like this? And it still blows me away every time. Look at the consolidation at the 100%. I don't look at these ahead of time too, by the way. If you're brand new, when we do the TradeFinder, I don't pre-search these. DJX was on there yesterday, so it was on there 2 days in a row, but I don't pre-search these. We look at them together so that you hear my thought process. I think that's a better way to learn. So not that I'm that great or anything. I don't mean it that way. I don't mean it to sound egotistical. It's just you're here, you're using your time to listen to what I have to say. I want to try to educate you as much as I can and make use of your time. And that's the way I view it. And if I've pre-looked at everything, you don't learn anything. You just listen to me talk. That's meaningless. That's a waste of your time. So when we look at this here, close at 143, so 7 points, it's very likely going to 150. There's enough room left there. We'll see what this one looks like. Oh, man. This is probably what's going on. So if you're new and you're wondering, well, what's he talking about and why did Zach remind me? The program has virtual memory just like your computer does. You know, your computer gets mad at you when you have 9,000 windows open and you run out of virtual memory and it just can't do anything anymore. Well, this program is analyzing a lot of stuff on every chart. So if you've got too many charts open, you hit a limit. It's the exact same thing as your computer with a lot of browsers open. And so it's getting testy and angry. And I forget about it all the time, so they remind me. Oh, wow. Tons of options. Some spreads are a bit wide. November. And November is a ways out. But yeah, we would have to see on this one. So this is one of those things where these spreads are too wide right now. So that's way too much slippage. There's a lot of strikes though. So this is one of those that makes me think that, especially because it was a big day today, so it was a volatile day today, they widened the spreads at the close. So this is one where you have to look at it tomorrow and see if those spreads narrow. If they don't, then I think those spreads are too wide. Just move on, pass on it and move on. If the spread's narrow, this looks pretty good. So this is kind of an iffy one. So I'm going to put a question mark by that. So what I'm going to do is I'm going to put on today's date, DJX is going to be our official one, knowing that we'll have some slippage there, but I think it looks pretty good. So I'm going to put this one on with a question mark. And that question mark has to do with, do the spreads tighten up during actual trading tomorrow? If not, just let it go, forget about it. If they do, then I think it warrants consideration. All right, so with that, geez, we're already at 10 o'clock. I really thought I was doing good, but I'll take a few questions here. Amelia, hope you're doing well. I am, thank you. Hope you're doing well as well. AHT, that one had a reverse split. So we're involved in that as well. And so far it's moved down from its reverse split. And I didn't want to see it break below here. I mean, the reverse split price was 18. So it's trading at 1650. It's got a little doji there. Wanted to see it hold 20. Now, the reason that I say that is when a company reverse splits, they do that because of the fact that the price gets so low. It got down to $1.80, so reverse split, you're at 18. So the issue becomes you don't want to, they've got an earnings report coming up. If they announced a reverse split and then they have a bad earnings report, that CFO needs to be fired, because they're gonna put their company in serious trouble. The reason you do a reverse split is so you can get back above $10 a share, because that's when all the investment companies, mutual funds, et cetera, can own your stock. If you're below 10, only aggressive with an investment objective of aggressive growth can own you, and it's even more severe below 5. It's very difficult for institutions to own single-digit stocks below $5 a share. So you reverse split to get it back above that so that more people can come in and own your shares. But if you do that, knowing that you're going to report a bad earnings report and it's going to tank the stock again, now you're in serious financial trouble. You're not going to be able to borrow any money or anything as a company. And I mean, you could be in trouble. So we hung with it with that. And that's all fundamental stuff, right? That has nothing to do with technicals. The technicals is a broke 20, which you didn't want it to do because that was support. So, you know, if it reports earnings and it tanks on the earnings report, then they screwed up and we shouldn't have followed along with them. So that's where that situation lies. Right now, it's just waiting on the earnings and hoping that they knew what they were doing. So hopefully that makes sense on why it's just financial suicide to do a reverse split before an earnings report and then report bad earnings. That makes no sense at all. So that, and then VMC, we'll pick that one. You put 3 on there, so we're trying to keep it to 2. So we'll look at this. Held in there pretty well, hasn't it? I mean, it bounced back up today. The clear support here at 170. We had a 90%, so we didn't have 100% extension. So it's only supposed to come back to 61.8. It looks like it exceeded that. So it's done all of its Elliott wave work at this point. Yeah, it made it down to 78.6. And so now look, see how it's hovering around the 61.8. So even though it came down and tested that, look where support really is at the 61.8% retracement. That's what it's supposed to do. So it's going sideways from there. So the DMI is a mess. The CCI is really kind of in between. I don't know what. I'm sorry, and I can't really. The charts aren't giving anything definitive here. It's just consolidating. Well, the ADX is getting down there. I was going to say the ADX is probably too high to look at a triangle, but it's not that bad. If you can get that ADX below 15, which is pretty close, it's not a triangle pattern. It's not a really good one. It's more sideways. But to me, that would be the best position to look at there. Otherwise, it's just a pure on guess. So that's an Elliott wave point here, right? What happens when the Elliott wave pattern is satisfied, everything is supposed to do? So we had a wave 5 extension. It wasn't 100%. It's supposed to retrace 61.8. It did. It's just consolidating right at that level. So this is the point in time where if you're trading Elliott wave patterns, you wait. This is where patience comes in. Let the pattern tell you where it's going next. Let it reform. It will. At some point in time, it's going to break and it'll set up a new impulse move and a corrective move, and it'll have a new pattern, whether it's a zigzag or a wave 5 pattern, or it's not even really a good flat right now. It's just sideways. So yeah, you have to be patient. So in trading that from an Elliott wave standpoint, there's really nothing to do. You're in between. But as far as trading on its own, if you had to put a position on, I would say a triangle. Angel or Angel, not sure which way you pronounce your name, but CPB. A COVID stay home strategy. Yeah, I mean, boy, if you listen to the financial people today, they don't think that Delta variant means anything. But talk to the people in Australia that are on full on lockdown. They can't do anything. LA is back to a full mask mandate. I don't understand why people are taking it so lightly, and there's no concern that it's going to be a big deal. Maybe it won't be. I hope it won't be. I don't want to go through all that stuff again either, but I just think it bears consideration, and we should be cautious of it at least. So there was the breakout of the triangle. It did it all in one day, and it's consolidated right there, tried to break below it and gotten back above 45. And it should feel like it will fill that gap at some point back up here, because triangles retrace their breakouts. Now, that again, there's no rhyme or reason as to when, but the trade is a pretty simple one. If you wanted to go long, your stop loss is at 45. If it breaks below that with follow through, then you close it out. But I think from a risk to reward standpoint, looking for it to come back and feel like, I see there's no wave 5 pattern because it was in a big triangle. I think from a risk to reward standpoint, I agree with you. I think it makes sense to give it a try, but you know where the support is. So if it breaks that, you get out. So I like that. So another person on AHT, we talked about that. XLF, Charlie, where do we go from here? Now that's a good question, because they're at the mercy of the rates, right? So we looked at the 10-year. A lot of people think it's going to bounce. It's oversold right now, so the rates may bounce a little bit. But as long as rates go down, financials will struggle, period. And that's just because the spread, they can't make any money. If they have good trading desks, Goldman Sachs, they make some money from their trading desk, et cetera. But if you're just a pure financial, you're a bank, and you're forced to make money off of the spreads because you borrow on the short end, you lend on the long end, and the difference in between is what money you can make. When that compresses, that means less money that you can make. So as long as rates go down, it's very difficult for them. So if rates hold now, all we did was fill this gap here at 36. I don't think that means anything. We do have a bit of a, this could be, where's the ADX? It got down below 15. It didn't quite make it to 13, which is my preferred level, but it got down below 15. You could look at that descending triangle and that could make sense because you can see what happens back when the 10-year was low last year, got down to 1% or less. So if rates keep going down, it's going to break to the downside and probably come test 29. If rates shore themselves up and start to move higher, then you could break to the upside out of this triangle. So as far as where it goes from here, I have no idea. As far as if you wanted to put on a trade, I think a triangle makes a lot of sense right now. Bitcoin is at 29, so it's pretty much still there. Yeah, George Fontenelles was my mentor, Merrick. Yep. Guess you knew that from the Out of the Money Butterfly. Never heard of it before him. He's the one that taught me that. Scott, Pelosi tested positive. I hadn't heard that. Is that right? She did. Some of the White House aides. U.S. warning travelers about traveling to the U.K. I mean, I think all traveling is in jeopardy right now. So I hadn't heard that. We'd like to reiterate the last YouTube video that we did, and all of the ones. Put a lot of time and effort into those. If you like them, please hit the like button. It helps us out. You know how it works. If you're not a subscriber, what it does is it gives you a notification every time we post one. And so you're not just having to look around all the time. I mean, I'm always about saving people's time. So you get a notification, you know, when to go look for one. But the likes help. And so we appreciate it. If you hit that like button when you watch one of our videos. The last one, pretty cool. Had that excerpt in it from Raoul Pal. If you wanted to hear somebody else's voice in there that's basically saying the same things we've been talking about. So please go watch it. The pro trader tip on Google, you know, the risk graph in general terms, and I don't get too hung up on risk graphs because of the fact that they represent a finite period of time, and that's expiration. This is what a butterfly risk graph looks like. Looks just like this. And it'll probably within the next week, I'll have that pro trader tip out. But that's what it looks like. And so as long as the stock moves somewhere within these wings, you generate a gain. This midpoint here is expiration, right? Because that's when most risk graphs are drawn. So if you're in the middle of the wings and you're up here towards expiration, that's when you have grand slam, whatever. So if it's in the middle of the butterfly, so it'd be at the mid strike, the closer to expiration, you exponentially move higher. But this is not zero. So these wings out here are not zero when you have an out of the money butterfly. So the zero line would be down here. So if the stock starts to move, and it would be over to the left, but it's off a little bit on scale because I got the chart right here. So the zero line is over here to the left. And as you move up, you start to make money. And so then as you get into the wings, closer to expiration, the more you make. So that's why the subscriber's like, well, why'd we take it off? We hadn't even gotten to this wing. We already made 100%. We made 100% and we were 300 points away from the lower wing. So it shows you the potential that they have. But you also need to look at your other indicators, what's going on in the market, et cetera. There's a lot of things to take into account. And, you know, nobody maximizes every trade, right? That's impossible. Nobody is good enough to do that. So if you generate a gain you're happy with, you take it and you move on. And 100%, I think, is good at any point in time on any trade. But it doesn't mean we're abandoning the fact that the target was at 2,900. Like I said, we will look to find another opportunity to put it on again and try to capitalize on the movement. But in general terms, that's what a butterfly graph looks like. And so if you turn it on its side, which we have some really cool animation on our strangles with the graph turned on its side, then you can get the idea of why this works for at the money, where it came from, because this is how the graph should look like if it's on its side. And so you build the wings, and as long as the stock is staying right in this area here, right in through here, bouncing back and forth between support and resistance, you're chewing up this time, and that's how you make money. So the stock is staying in a trading range and you're staying within the wings, and that's how you make money. Now, this would be like way up here out of the money. So let's say the midpoint, our target price of the stock was 37, and perhaps the stock's trading down here at 29. Well, then that's where you get, then it's hard to show in risk graph formation because it's a finite period of time, but it's dynamic because as you start, the stock starts to move your way. So there's going to be like bent lines and stuff. It's not just as sharp as this if you have a real-time risk graph. So as you start to the upside, this is not on the zero line. The zero line is like over here, like that. So as the stock starts to move up, you start making money. So this bottom line here is already profit. And then the closer you would get towards, if 37 was the target at expiration, then you make money. So it's just why I don't show a lot of risk graph. I know what the risk graphs look like, and I'm sure that that's the question. You want to see what it looks like, etc. But it's just difficult when it's, it's at expiration and things are changing during the day. PLTR, we'll do a couple more and then we'll wrap things up. Boy was in danger. 20 is the area where it absolutely has to hold 20. And it's in a wave 5 pattern to the downside. DMI looks good. I mean, at this point in time, it's still pretty much the same scenario as we've looked at. It's 20 is support, resistance is 25, in between, really tough to make a call. The wave 5 pattern is pretty well set up, but it's got to break 20 first. If it breaks 20, then it's probably headed to 10. That's the likely move. For it to move to the upside, it's got to break above 25. So support's 20, resistance 25. In between, really not a whole lot. That's a good question, Merrick. What percentage range do I consider okay? I assume you mean on profit. Every position is different. And it's not just as simple as that. Looking for a potential profit is one thing, but there's so many more things that go into when to get in and when to get out. Every single situation is different. So there's not I don't believe in that. Look to make 100% when you're right. Take 50% loss. That is a system that's guaranteed for failure. Trading doesn't work that way. You better be more dynamic because the market is dynamic. And so every position has to be looked at differently with what's going on. And, 30% might be great on one strangle where 70% was easily achieved on another one. Every situation is just different. So Carol wants to look at PWR. Whoops. So here's your support at 85. So that's key. We need to hold there. Man, that's a good looking triangle though. Are you in a strangle? And the ADX is sneaking up, isn't it? But really nice descending triangle. But if it's directionally based, then it needs to hold 85. It had a big extension, 215%. Wow, that's a big wave 5 extension. So if it does break, I mean, we can tell you where it's going just by looking at where the fib retracement is. If it breaks to the downside, it's probably a yikes, down to 70. So if it breaks to the downside, 70 is probably where it's going. If it breaks to the upside, it's got to get back above 100. So it ran up to 100 and people took profits there. And it's consolidated. It's done a pretty good job of hanging in there at 85 because that wasn't a whole lot of support there. I would have actually thought that 80 would have been more like where it came down for support, but it didn't. It found it at 85. There was some support at 85, but I would have thought 80 was stronger. So that's, I mean, if you're looking to do something, I think a strangle would be great. If you're in it, that's it. It needs to hold where it is now, or it's look out. If it breaks to the upside, if it can get above 100, then it could go again. One more on Netflix. I don't know if you saw after hours. They reported earnings. They were mixed. They did better on some things. They did worse on others. It traded all the way down to 496 after hours and basically moved back up to where it's pretty much exactly where it closed on the day. So it's kind of like a big zoom to the downside, then came back up, came back, and now it's just flat. So it's pretty much right back where it was at the close. So who knows how the traders are going to look at it tomorrow. Again, it was the report was very mixed. Some of it was better than hoped. Some of it was worse. It's in between. They're talking about getting into some other things. They're talking about how COVID hurt them on putting out new content. They said they're still going to spend money on content. So we just have to see how that plays out in tomorrow's trade. Pretty much came down and filled that gap. Wanted to give it a chance to see what it did on earnings. Initially, it looked great with the big drop, but then again, it came back to where it closed. So you can see this was the gap we were looking for. And so it filled that today. And so we'll see how it reacts in tomorrow's trade. Kind of looking at possibly a big butterfly on this one too. I was playing around with that today. Looks pretty interesting. And this is something to consider as well. Based on what happens tomorrow, right now it looks like a decent expanding triangle. It's just not really super wide. It's only 40 points wide, so it's not quite big enough. So even if it breaks out, I don't think that's enough to get it above here. But we'll see how it plays out in tomorrow's trade. It certainly could have been viewed more negatively than it was. It initially was viewed really bad, but like I said, it's pretty much where it closed. All right, everybody. Thank you so much. If I didn't get to your questions tonight, I apologize. I guess I got more long-winded than I thought. I really thought I was moving a little bit faster tonight, but as you can see, we've closed out a ton of our past case study considerations. So hopefully you found this informative. When it's posted, please like this video as well. I think this one had some really good stuff in it. So thanks so much. Appreciate your time. As always, have a great week.